Want to use a PGR in your cereals but have no time for a separate pass? Manipulator PGR can be applied as early as one tiller. Just add it to your herbicide to reduce lodging, increase harvest efficiency, and maximize yields. Talk to your retailer for more info and to confirm acceptable tank mixes.
Well, let's talk the markets here on Real Ag Radio. And right now we are joined by Brian Voth of IntelliFarm. Hey, Brian, how's it going?
Hey, Sean, I'm good. How are you?
Pretty good, man. Hey, you enjoying those NBA playoffs?
Yeah, other than the lack of performance from the Mavs on the last game, that was a little embarrassing.
Mm.
Who shoots 50% from the free throw line?
Yeah, that's not good.
As a team.
Shaquille O'Neal. That's who does. Maybe not even that good.
Yeah. But I mean, as a team, like, you miss 12 free throws or whatever and then lose by 4. That just sucks.
That really hurts.
Yes.
That hurts.
So tonight's another night. We'll see where we go from here. But
let's talk about the markets here. We if you look across the spectrum, I'll call it, we have kind of bounced off the lows.
Quite a bit, actually. Yep.
Yeah, exactly. So I guess we could cover the why of that. And I think more importantly, what do we do now? And how do you see the outlook here as we get this 2024 crop planted?
Well, if I can stick with the basketball analogy, the bounce that's just happened here, don't miss the free throw. This is a great opportunity for getting old crop cleaned out and also adding new crop sales. And I fear that a lot of people get sucked into this thinking that, oh, well, now we're rallying and now we're going to go back to, $16, $18 canola or $11 wheat or whatever. Throw whatever number you want in there. And I would just really caution against getting too bulled up right now, because the fact remains, the balance sheets, for the most part are not tight. There's a couple of individual crops that are, but for the most part, the balance sheets are not tight. Canada, US, globally. And this run has been short covering by the funds, which they have bought back a pile of positions in the last couple of weeks. They had some pretty massive short positions by the end of February into March, and they have reduced most of those to almost even, maybe small short positions, maybe small long positions on a couple of commodities here as of end of last week. So this is not a fundamentally driven rally. And that's the concerning part to me, because if it's not fundamentally supported, it's just been technical, then a lot of the times those rallies die just as fast as they went up.
You look at the last 3 months, corn, let's use Dees corn as just one example, but a lot of commodities are following this pack. We're up 36.5, which feels pretty good. Would you be more focused on the 23 crop clean out than worrying about 24 if you have both of those to deal with?
No, I think it's both. Well, I think they go hand in hand because the timing would be the same anyways. The bigger thing on 23 is you're running out of time. And this is working off the premise that you want the bins emptied before new crop comes in. But if that's the case, you're down to the last couple of months. And keep in mind, a lot of buyers have coverage all the way out to new crop already. So it's a time thing, but also the fact that demand is getting mostly covered. So if you don't find an opportunity to sell stuff and move it here over the next couple of months, it may get dragged into the new crop side. But from a timing perspective, we are right into the window here where seasonally markets tend to peak and drop off going into the summer months. Like mid-May is oftentimes the end of the spring rally. Sometimes it can last into June, but if there's not major weather issues, and yeah, I get that it's been raining down in the States and, corn planting is a little behind the 5-year average. Soybeans are just marginally ahead, but it's not enough rain that those acres are not going to get planted. And then you go back to the rain mixed grain analogy. So you've got solid moisture for that crop now. And I don't think it's an issue of whether the acres get in the ground or not. There's not that much rain. It's not flooding. So at this point, it's been construed as a bullish thing, and that I think was led to the funds buying back their positions. But that's what it's been. It's been a technical rally based on rain in Brazil, based on rain in the Midwest. And I don't think it's fundamentally supported.
You and I were texting yesterday about our Canadian Farmer Sentiment Index results for April and the outlook on selling crops. Do you think it's a good time to hold your inventory or to sell your inventory? Kind of get a bullish bearish comparison there. The index in April bounced back higher, but into the positive territory at 117 out of 200. Back in January it was 95. We're essentially back to where we were in October which was 115. What do you make of how much that has bounced around?
Well, and I think you and I talked about it, like with that sentiment index, you could overlay grain prices onto this, and it follows that very, very closely. And it brings to mind the whole everybody's the most bullish at the top and bearish at the bottom idea. When things are going up and whatnot, everybody's in a good mood, everybody's got this. When things go down and it doesn't go the way guys planned, well, then it's like, well, now what do I do? Like, now I'm not sure, and indecisiveness starts to rule, and maybe panic sets in a little bit for certain things. And yeah, like I think it follows the markets very, very closely, which is, I think, totally normal and makes total sense. But I just get a little bit worried about the fact that, again, we're not fundamentally supported to have higher prices. And some of these commodities have dropped. If you go back, the 2014 to 2020 highs, corn already dropped back to those lows already once. So did Chicago wheat. Kansas and Minneapolis have been close, but we haven't quite gotten there. Canola and soybeans have never even come close. So to me, the biggest risk is on oil seeds, actually, that we end up dropping quite a bit more yet by the time we get to harvest or into the end of the year. And one particular note, I don't know if you saw this or not, but there was last week, Karen Brown had it on Twitter that looking at new crop soybean exports out of the US, well, they're the slowest pace in decades. And the fact that there has been zero sales to China on new crop US soybeans, that's a bit of a concerning stat when you consider the fact that the balance sheets are penciling in record demand levels for new crop soybeans. So what is already not a tight balance sheet could get even more abundant yet. And now you start talking about all these tariffs and whatnot that they're throwing in on, if China decides to retaliate by not buying more soybeans, well, that balance sheet could get maybe not to 2018 levels, but not supportive.
Is there a point here where China needs to buy U.S. soybeans, though?
Well, not as long as they can keep buying out of South America, but it just makes the situation even worse here at home then, from an oilseed perspective.
What do you make of, on our Canadian Farmer Sentiment Index, we also measure confidence in marketing crops. And I've often said that whether you think the market's going up or down, you need to have a plan. You need to be confident in that plan. And that plan can change based on what happens. But, do you have confidence in your marketing plan? And except for 2 months going back to September of 22, all of the months except for 2, we have been in negative territory. Farmers not feeling a negative confidence when it comes to their marketing plan. In April, we are up to 85, which is off the all-time low of 75 back in January. What do you, when I tell you that farmers' confidence in marketing crops is 85 out of 200, what do you make of that?
It's a disappointing statistic, I guess, in a way, because there's a whole book on this. Grain marketing is simple. It's just not easy. And it does become a lot easier. And I know I've harped on this a lot when we've talked, like, you have to know the numbers of your operation, and it takes a lot of the guesswork out of it. If you know that, hey, I need $12 canola to break even. And if I can sell $14 canola or $15 canola, I'm penciling in a nice profit. You're not aiming for the high. And unfortunately, I think way too many people are still hung up on this. I need to hit the high. But the problem is with the high, you don't know what the high is until after it's happened. And then it's very hard to hit that after the fact. So
there's no derivatives in retrospect, unfortunately.
No, at some point or another, if I can figure out how to market in reverse, this is going to work out really, really good. But until then, you have to look at your numbers and know, where am I actually building in a profit, and not get into the whole, farmer thinking of, oh, I sold 14.50 canola and it went to 15. Well, I lost 50 cents a bushel. No, you didn't. And until you've sold 100%, you should always hope that the price goes up. It's way easier actually pricing into an uptrending market than a downtrending market. And if you're still at a profit at 14.50 and it goes to 15, well, guess what? You're just at a bigger profit for 15. The biggest thing is being disciplined and actually pulling the trigger and not getting the deer in the headlight looks and like, oh, should I price? Should I not? And not knowing where your numbers are, especially now. And obviously a lot of things have changed in the last 2 years, with interest rates being a huge one, obviously. We've had some pretty frank conversations with clients this year that, given where we still think markets are going to in the next 6-7 months, breaking even on some commodities, and I'm talking breaking even across all costs. So we include like land opportunity costs on land that's owned, like the fact that you could rent it out and make money doing that. So we want to cover that off, covering off depreciation, covering off all these non-cash costs. Is that breaking even may be considered a win in 2024. The 30, 40, 50% ROIs that we've had on some crops in the last few years, that was fantastic, but it was the anomaly. This is not normal. 10%, 15% ROI, that's a normal ROI long-term in farming. And it's easy to have forgotten that over the last couple of years.
Yeah, I found it interesting that future farm financial performance, for the first time since we started doing this, going back to September of 22, is higher than current farm financial performance, both in the negative. One's, current is 85 at a 200 and future is 87 at a 200. So I think farmers are seeing that. That tells me farmers are kind of seeing that kind of a year, whether they like to admit it or not. They're seeing that, maybe that is a win, break even.
Yeah. And that's why I say, like, I don't want to sound like super negative or whatever, but it's just the reality that breaking even to, a 10 or 15% ROI is going to be a real win this year, I think. It's not enough fundamental backing at this point to push us to higher prices. And keep in mind, like, the last time this cycle happened, from 2010 to 2013, we had super high prices. We came crashing down after one good year, and we went sideways for 6 years, from 2014 to 2020. So now I think after, we've had 3 years of running of prices up and back down, we could very easily settle into a sideways range at these levels. Unfortunately, I still think that canola, we have not found the new low on canola yet, which is probably more like $12.50 a bushel ish, which nobody's going to want to hear that. But
I don't want to hear that. And everybody should nobody. I don't want to hear that.
I don't want to hear it either. But I think there's no point in, closing your eyes and just hoping for the best. You may as well go into this with eyes open.
Well, with some of the rains we've had in the past 3 weeks, production numbers looking a little bit better as well, for sure, for a crop like canola.
The drought maps have changed substantially, both in U.S. and Canada. So it's good from a production perspective, maybe not so great from what it means markets might do.
Hey, Brian, really appreciate you joining us here today on Real Ag Radio. That is Brian Voth of IntelliFarm. Hey, Brian, thanks a lot.
Thanks, Sean.